What better way to wrap up the year, guys, of 2022 than talking about my two biggest stock market losses percentage-wise of the year? And actually, technically, one of them is not even a loss because I didn't sell, so it's an unrealized loss. But either way, on paper, on that stock, I'm down a lot, and the one that I sold on, or that I sold, percentage-wise, I lost a good amount as well. So we're going to talk about those two stocks in this video, and we're also going to break down just in general some other stocks that I'm looking at and kind of where my head is at as an investor trader as we're heading into the new year. So sit back, relax, hit that like button, guys. I appreciate you all for tuning in as always, and make sure to subscribe, and let's just dive right into the video. So this stock right here is DraftKings, right? You guys know DraftKings. You bet on sports, on, pretty much that's all it is. It's a sports betting app. And you could do some other games and stuff like that. But, it's mostly a sports betting app. And this is a stock that flat out got into a bubble in 2020, heading into 2021. And let me actually make my face a little bit smaller so you guys can see it. And I pretty much got caught up into the hype. I'm not going to lie. And, luckily this was a speculative position for me. And I talked about it on the channel, back during these times. And I mentioned how I was buying a little bit as a speculative position. And, that was in initially, I believe, in the crazy thing is low mid 40s. I think I started buying it originally, and now it's at $11. I mean, look at this thing, guys. Holy crap. Low mid 40s. After it tanked from 75 bucks at that point, I was like, okay, this is reasonable. It was down at the time 40%, and then it saw a bit of a spike. I don't know. I forget if I trimmed a little bit or did whatever at that point, but then pretty much from that spike to 65 bucks, it tanked all the way down to pretty much $9. And I do believe I did try and catch the falling knife a couple times. I mean, I did average down in the 30s a little bit, and even the 20s. I believe I bought some DraftKings, but then I finally cut ties with it at $17, roughly in that range. $17, $18 is where I cut losses, and I think I did ended up getting my average cost down to about $35-ish roughly on DraftKings. So again, I cut it at 17, 18, so lost 50% right there on on DraftKings stock, and that was a quick 50% drop. It wasn't even that didn't even take like the entire year for that to happen. That happened throughout the course of half a year, 6 months, pretty much 50%, just like that. So yeah, DraftKings is number one, and I'm sure you guys have a list of stocks as well that you can go like one by one that have gone down a lot, because 2022, or this year that we just lived in, my head's already in 23. It was the year of a lot of these stocks popping, pretty much the bubbles popping, that formed during the pandemic 2021. A lot of these hype retail stocks, and this was one of them, and it completely popped, and now it's at $11. And I sold it months and months ago, again at about 17, 18 bucks, and I'm honestly glad that I cut ties with it. And the other one here is Alibaba, which I have not cut ties with, and I'm going to probably hold on to it for the long term unless anything crazy changes in 2023. That's why I always say, probably, or, I might hold on to it for the long term, because you never really know. I mean, because anything could happen. A black swan event it could happen in a month or two, tomorrow, for all we know, even. That can change everything. So as of now, with things, how things are standing now, Alibaba, I'm going to continue to hold on to it, right? And I'm down roughly, and this is one that I started buying, in the low 200s, 205, $200 roughly, bought in the 180s. This is one that I pretty much bought every 20 bucks that it came down, I was buying. Again, low 200s, 180s, 150s, 60s, bought a bunch in the 120s. As it got under 100, I believe I bought some in the 90s and the 60s. And this is one that I got my average cost down to about 125 on it right now. But still, I mean, at one point, guys, On Alibaba, I was down a freaking crap ton. I'm still down a lot percentage wise. And this is actually a bigger dollar value position than DraftKings. Let me actually get some water real quick, guys. It's actually a bigger dollar value position than DraftKings. So the percentage, fluctuations do mean more to the portfolio. But I would still say Alibaba is on the more speculative side of the portfolio. It's not like Google, my biggest individual stock holding, or, VOO or VXUS or some other ETFs that I own, or, some other stocks that I own that are bigger weightings. These are on the more speculative side, which I tend to keep 10% and less on my portfolio, and something like a DraftKings, that was in the 1%. Category, Baba's more in, the 2 to 3-ish percent. So that's how I'm looking at it, percentage wise. And again, more of a speculative play. And my average right now on Baba is right around 125-ish. I'm glad I've been able to get it down, and hopefully I can get it down even more. I didn't really buy in the 50, 60s or 50s. I just held through that. I'm not buying here. So I'm just kind of holding on to it and seeing how it plays out over the next couple of years. Again, if anything crazy happens, Black Swan, all right, maybe I'll sell it and take my 40% loss. Or what am I down right now? It's at $88. My average is at 125. That is roughly 30%. Okay, it's not 40%, it's 30%. But still, 30%, that's a pretty decent drop. And at one point, I was down way more than that. When Baba was, if you guys didn't know, these Chinese stocks have done very well in the past couple weeks to end off the year. Baba at one point was under $75, $70. It was in the 60s, guys, low 60s. So, at one point I was down close to 50%, 40%, 45, something like that. And now it's rebounded, but still, I'm down a very good amount. So, again, the biggest lesson from this year, at least for me, and you guys know, a lot of you have lost a lot of money. A lot of stocks are down. A lot of these retail stocks have been destroyed, and the large caps as well. Pretty much all the stocks out there, except for, healthcare and energy stocks, all of them have gotten destroyed. So we all know at this point. But the biggest lesson that I've learned is cutting stocks loose. If you see a stock downtrending, the fundamentals are deteriorating, you're starting to think to yourself, why do I even own this stock? I probably should sell this stock and invest it elsewhere, and, stronger businesses, or maybe just an index, right? If you start having those feelings, sometimes the best thing to do, and I've learned this throughout not just this year, but I've been investing trading for, 8 years at this point. It's just best to cut things loose and move on, especially when you're trading. If you're down some percentage points and you think, it's going to rebound, I'm going to wait it out. Sometimes it's just best to sell and just move on. Go cash, or, look for a different stock, or just do whatever, right? Sometimes it's just best to move on. And that's kind of what I've learned this year. I didn't sell Baba yet, but DraftKings is one that I sold and learned that. And I'm sure a lot of you guys have learned that lesson as well. Cutting losses really is not that bad of a thing, especially if the business you realize is just a flat out bad investment. Because let's be honest, DraftKings was a bad investment. I should not have bought that stock, but I did, because, I got caught up in the, DraftKings hype a little bit there. And, a lot of people, that's what happened to a lot of people this year. And it's okay to admit that. We're all humans. And you got to realize, all right, maybe it's time to just cut the loss. It wasn't a great company to begin with, and just move on. And that's what I did with DraftKings. And at the end of the day, you could use that against your taxes, right? If you had some gains for the year, you had some losses, write it off against your taxes, or your gains. Talk to your CPA about that. I am not a CPA, guys. So, yeah, heading into the new year, I'm really focusing on a couple of big tech names here. There's really, there's a bunch, honestly. And there's some other companies, too, that I'm looking at. But Adobe's really one that I want to buy at some point this year. I've been mentioning this a ton on the channel, guys. And who knows, maybe at some point this year we do end up getting a buy point on Adobe, which in my eyes is under $300 and honestly under $275, more towards $250. If this thing could end up falling to those levels, I'll be a buyer of Adobe. Another one that I'm looking at, of course, is Alphabet, also known as Google, which is one of those stocks that, unlike DraftKings and Baba, this is a bigger holding. It's actually the biggest individual stock holding that I have right now, and it's going to remain that way, especially, if I continue to buy it. And I do plan on buying more if it comes under $80, mid 70s, low 70s. I'll be a big buyer of Alphabet. And we could talk all day, guys, about these different stocks. But overall, the psychology, the way that I'm looking at it is, and this kind of goes, into another lesson that I learned in 2022, cut the fat around the portfolio. There's going to be some stocks that you own that are just flat out, like I said, with DraftKings. I mean, it wasn't a big holding for me, but I was down on it. Why am I holding this stock that's really a bubble at the end of the day? I made a mistake on it, and, where is it going to go in the long term? Nobody knows. You want to, in my eyes, I learned, big eye-opening year, trim the fat, focus on the companies you believe in the most if you're individual stock picking, or if you have a specific strategy, if you're a dividend investor, you're looking at blue chip dividend stocks. If you're looking at dividend aristocrats only, you're looking to invest in those types of companies. If you're looking at growth stocks only, if you're doing index fund investing, find something and stick to it. Double down on what's been working and just cut the noise out, because at the end of the day, there's been a lot of noise throughout the entire year, and that's going to continue into 2023, no doubt about it. But cutting out the noise is another thing that has worked, has worked for me in terms of just, blocking things out. Although I am kind of making videos every day, so I'm kind of in the noise and probably contributing to the noise a little bit, but hopefully the content's valuable, guys. I really hope it is. But overall, you guys know what I mean, right? Trim the fat. That's kind of what I've learned. Don't be afraid to cut loose some of the garbage picks, because we all have garbage picks. Let's be honest. We all have garbage picks at the end of the day. And, that's kind of the way I'm going into the new year. I'm focusing on stocks that, first of all, make a lot of money, profitable. And that's kind of always been my thing. I've never been one of these guys that's, only in speculative stocks. All my stocks, for the most part, guys, are large cap companies that are profitable, and a lot of my money's in index funds as well. I've been saying this for a long time. This is nothing new, and that's what I'm going to continue to focus on. So I'm going to wrap the video up right here. If you all enjoyed it, make sure to hit that like button, of course. Hit that subscribe button as well. If you guys haven't subscribed yet, I don't know what you're doing. We cannot go into the new year without you subscribing. So hit that subscribe button. Get your money from Moomoo as well, and from Webull, linked right down below. Check out the Patreon if you guys want, also linked down below. And with that being said, I'll catch you guys in the next video. Peace out.